Multifamily is pretty safe. It's never varied much from what we thought it was going to do. It's never been amazing or terrible. Office and retail that we have is more amazing or terrible.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate, right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Matt Van Maanen here on the show. Matt, welcome.
Thanks for having me.
I'm excited you're here. Say, for the audience sake, who are you? Where are you from? What do you do?
All right. I live here in Iowa, a town called Pella. I've lived there most of my life. I lived in Des Moines for about 6 years, but mostly in Pella. I live there now on real estate, but I also have a business where I mostly focus on working with business owners, families, on growing their wealth, protecting their wealth, minimizing taxes, all that kind of stuff. Real estate is another thing that I do. They kind of are intertwined a little bit, which I like. But yeah, that's what I do. I've been doing real estate for about 9 years, but I've been doing the financial wealth strategy side for about 17 years.
Well, there's a lot to unpack there. Tell me, are you originally from Iowa?
Yeah, born in Iowa.
Would you grow up in Pella or not?
I grew up in Pella, yeah.
Okay, yeah. Where'd you go to school then?
Are you talking about college?
Yeah.
Okay, college, I did go to Central College, which is also in Pella.
Okay.
I didn't get out of Pella until after I graduated college.
Yeah. Let's talk about the real estate side of things. Tell me about the very first investment on the real estate side.
I'm going to talk about the first time I basically started a business, because I did buy into my building with a group of investors that already had done everything.
Okay.
Very passive. They're like, hey, you're renting from us, so you can join in.
Yeah.
That was just probably about 8 years ago. But 7 years ago, when I was working with clients who was very successful, didn't go to college, worked, but just built up a nice real estate portfolio, and was one of the most successful people I was working with. And I knew that the property that he had, one of the properties that he had, was just really providing a ton of cash flow. And he was kind of like, I don't want that one anymore. I just don't want it. And so I said, well, just hire a property manager. And he's like, well, no, I want to buy another one. And I was like, well, just go get a loan. And he said, no, I just want to be done with it. I want to sell it.
And you're giving him this advice largely because on the financial side of things, you're providing him some options and maybe about what to do past sell.
Yeah.
Because it incurs some tax consequences, among other things.
Oh, yeah. But he was like, no, and so I was like, all right, I think that's a good property. I think the timing is right. I knew I had the money. I knew it was a pretty big property. It was a big one for the first one. Most people don't go out and buy a 40-unit apartment complex as their first property.
Okay, right.
But that was it. I had the money. I knew I had the down payment. I could borrow from my life insurance. I knew I could finance the rest with the bank. And so I took it over, and that's been great. It's always cash flowed, more than cash flowed. It's almost doubled in value. And if I sold it, it would definitely double what I paid for it. But man, since then I've added more, but yeah.
Tell me, I'm curious. So you're right. Most people don't jump in with the 40 unit to begin with. How did you manage it from the get-go, and how do you manage it today?
So the first step of getting into real estate is getting some of the systems down, right? The management. So I found a manager, made them, they went in as part owner because I wasn't real comfortable with them leaving. Nowadays, I have a whole list of managers I'd go through, but at the time I was like, I want to make sure that this property manager sticks with me. And if they're an owner, then they'll do that. And so they were part owner, and they've done an amazing job of managing that property and, worked it out, talked to some local banks. I've built some relationships up there that I know how I'm going to utilize them to finance the purchase.
Yeah. All right. So you brought the property manager in as a partial owner. And so I sure assume, right, they're still in that position today.
Yeah.
Both ownership and managing the property.
Right.
Yeah. Okay. Have you employed that strategy since then? Or is that the only time that a property manager came in as an owner?
So I have about 7 LLCs, and definitely not always. It's not always, but I'd say that, yes, I've done it then. I've done it another time. Mm-hmm. The other one, very small ownership stake, but just some ownership stake, just to make sure that they're thinking of the property management, not just how they're getting paid, but as an owner, right?
Yeah, I've heard the strategy utilized from a number of folks, and I always found it to be interesting to have this conversation about that. You touched on some of the pros, so I get that. That's easy to understand. What are the cons of bringing a property manager in as an owner?
Well, you're giving up ownership, right? You could have been 100% owner. Yeah. Now, depends on where you're bringing them in. Are you bringing them in as such a small ownership stake that they have no voice? Or do you want to bring them in as a 50-50 owner? And then you have to run everything by them. So that's a big thing, is just the same thing as going in with anybody. Do you want to go into business with that person?
Sure.
Right? I've been pretty happy with the ones that I've gone into business with. Yeah. In the other cases, I didn't feel like it was needed in those cases. Yeah. So.
Got it. Where is that 40 unit? What city does that happen to be in?
Knoxville,
Tennessee?
Knoxville, Iowa.
Iowa. There we go.
Small town. This is investing in Iowa, right?
Touche. I deserve that one. I don't know why Knoxville, Tennessee comes to mind. Certainly.
Well, no,
that's fair. Well deserved. I appreciate that. Yeah. All right. Let me ask you a question. Another one about Knoxville, Iowa. Small town, Iowa.
Yeah.
What's the pros and cons of investing in small town, Iowa?
Yeah. So the cons would be that maybe there's a little more risk in what's bringing people into that town. Mm-hmm. Cities are always growing. It seems like the right cities, I guess, not necessarily all cities.
Yes.
But, if you go to a larger city and places where they're doing things right, growing, one business leaving is not going to affect things that much. Right. You go into a place like Knoxville and they have 3M. They don't have a lot of other things. They have a lot of people travel into Pella, where I am, but there's a little more risk there. Is that town going to grow or shrink? The plus side of investing in Iowa and small town Iowa is I think you can find properties that will cash flow better. I mean, the cap rates are always a little higher, it seems like, for multifamily, not necessarily, comparing industrial to multifamily, right, but just multifamily to multifamily. If you're talking about big city versus small town Iowa, you tend to get better rates. That means the property is going to cash flow better. It may not appreciate as much, but in the cases that I've had, they actually have appreciated very well. And it's in Iowa. I like Iowa, live in Iowa by choice. And so it's kind of nice to have real estate around Iowa. I know I could have it anywhere and still be in Iowa, but
even in Knoxville, Tennessee, you could. That's true. But you choose to be here in Iowa. Well, so why Iowa? Because you do have choices. You have choices about where you can live, where you could do anything.
Yeah. So why live in Iowa?
Yeah. Why here? Why live here and why invest here? What keeps you here?
I like the attitude. It's a little bit more laid back, friendlier. My wife both have family that live in Iowa, so we can be closer to family. Family's probably the biggest thing, but I like Iowa. Iowa's a great place to live. It's not New York City, and I don't want to live in New York City. So I visited. I can visit a few days, but I can't live there.
Hi, it's Ava Baukamp, the Investment Relations Manager for Neil's firm, Legacy Impact Investors. I'm inviting you to join us for our next investor workshop, our monthly legacy briefings. In these tactical Zoom calls, we cover topics and case studies for subjects such as taxes and depreciation, navigating macroeconomic shifts, and evaluating deals as a passive investor. At each virtual workshop, we are joined by an industry guest who covers their topic in 45 minutes or less. No fluff, no pitches, just education and conversation with an expert each month. Every workshop ends with live Q&A from Neil and our guest. All briefings happen on the last Tuesday of the month at 3 p.m. Central. If you can't make it live, recordings are sent out exclusively to those who've registered in advance. To join us on the last Tuesday of this month, visit legacybriefing.com. Go to legacybriefing.com to register. If you're a first-time registrant, I'll send you a free resource at sign up. Head to legacybriefing.com and I'll see you soon.
I think you and I spoke in the fall, if I remember correctly, when you visited New York City. Yep. You were like, I've been there, done that now.
Yeah.
Just after you returned.
Yeah.
Yeah. So what does your portfolio consist of today? Largely multifamily?
Yeah, largely multifamily. I have about 310 renters.
We say renters. Doors?
Yeah, doors.
Okay.
But some of them are, so like 280 of those are probably multifamily.
Okay.
And those are all, they're not quite as big. I have some office. I have some retail. Mm-hmm. Those ones are, rent for a lot more.
Yeah.
But I include them in that 300 number because there's probably about 15 businesses that rent from me.
Okay. Got it. No, that makes sense. All right. So real estate's kind of like your side hustle. Well, so my question with it, you got a day job, is how does one go about building their portfolio when they do something else?
Yeah. I think that you probably have to look and find a good manager, right? Because you can't handle the management yourself.
Correct.
you can kind of try to do that for a while, but you're going to find that you're going to have to exit one of those two things. So you have to find a good manager. But if you find the right manager, you can say, this is what I do. I'm going to help. The manager knows I'm there to set up the LLC, help with some tax stuff, get the loan. But the day-to-day stuff, I can hear about it, but I don't want to hear about daily. They're going to take that on. That's part of management. It's pretty easy if you can find a manager. The thing is people really don't want to manage a house. They want to manage an apartment complex.
Correct.
So that's the thing that you have to kind of try to get to is when can you get a manager to handle that? When can you get big enough renters that a manager will be happy in that job so that you can keep them and so that you can not have to hear about things, right, to deal with that. So,
yeah. Okay. No, that makes sense. What's been your experience? You've got some office exposure and you mentioned it. So I'm going to ask just because all you read today in the headlines is how terrible office happens to be in the environment. What's your experience though?
Well, yeah, I'm not in the big cities. So mine is more, it doesn't correlate because mine is all about right now. It's amazing. Right now, it's probably doing the best of what I have.
Yeah.
But go back a year, you lose one tenant. There's more risk than apartments.
Right.
And one of the buildings I have that has offices, there's basically 4 tenants in it.
Sure.
Right. You lose one of them. Now that property does not cash flow and you're having to.
Right.
So multifamily is pretty safe. It's never varied much from what we thought it was going to do.
Yep.
It's never been amazing or terrible. Office is more, and retail that we have is more amazing or terrible, right?
Yep.
Not as bad as what I think the big cities that they've been more affected. I mean, I just don't have enough that I've lost one tenant. That was bad. Got somebody in there within a year. And so I had one bad year. But since then, it's been great and can't really complain about that.
Yeah.
So.
Well, your experience is similar to ours in our office portfolio, or what we have in the portfolio that is office. It has been performed very well.
Yeah.
And so it's kind of interesting when you read the headlines and then to couple that with one's own personal experience with that. Talk to me about planning. I think part of your day job is planning and planning for the future. And I know, I've certainly had conversations about this, some of the things you've done for your own self, for your family. How many kids do you have?
5 kids.
5 kids. So when you build your portfolio and the size it is today, you've had to given, especially with 5 kids, you had to have given thought to building a legacy and what that looks like. And the plans are going to place there. So maybe give me some of your experiences and where we want to go with that in terms of what you've done and what that looks like.
Yeah. I think that's kind of, you build up, the first thing is you get into real estate and you get the systems down, and then you start to take that cash flow and multiply it and build up because you're comfortable. You have the systems down. Now you can start to expand and use leverage and multiply. The last step though to consider is what's going to happen to this if I'm not here. Right. And that's what part of what I do for my day job is working with business owners and just helping them with how do we reduce your risks? What legal things do we need to get in place for you? I'm not a lawyer. I don't give legal advice, but do you have trusts, LLCs, buy-sell agreements? Do we need to protect against, what happens if you die earlier? What happens if you get sick and can't do what you're doing? What if you get sued? How do we protect you from those things? How do we protect you with increasing your cash flow and liquidity? Where I'm going with that is we can build up a huge real estate portfolio and it might ruin our kids, or it might not be a good thing, right?
Sure.
Or certainly it could be not appreciated. What I've done personally is I have multiple trusts, multiple LLCs, multiple trusts on different LLCs. And what I'm trying to do there is protect not just from state taxes, things like that, but also provide protection from creditors and keep centralized management. Have the family come together to talk about the business and keep it a business and not have it get so spread out, dispersed that it starts to get sold and all these different owners come in and it doesn't have a focus. And so trying to build that in for people, the estate planning is not just about reducing the taxes, getting things out of your state, but also how can you really benefit your kids or the world in the way that you want to. And it's not all just, it can't all be done on a legal document. It's got to be taught, right? You have to teach your kids, but there's a lot we can do with some of the documents that it's the last thing we do is, we want to build up. Most people get to that point and then they go, maybe now I should start to, maybe it's too late or too early. And so they never do the estate planning or teaching of the kids. And that's the last step. And so trying to create a legacy, that's one of the things that we really want that I've done through documents and moving things around, but also in talking to my kids about, here's what I've been building, and it's hard to earn a dollar.
Right.
So I want you to appreciate these dollars coming in.
Right.
And so just making them appreciate, seeing if they want to be a part of the business, all that kind of stuff.
Well, we're going to leave our kids something, right?
Mhm.
So it might as well be a legacy.
Yeah.
And what sounds like you've done is given thought to that and followed probably a framework, a blueprint that you and people in what you do get a layout for folks and have conversations where you're going to build intentionality into what you do and give some thoughts to what do I really want this to look like?
Right.
Along with, you touched on a lot of things, right? I mean, along with the ability to reduce some of the tax liability upon death, upon transferring, growing things outside of the estate. So what I hear you saying is some things go into trusts so that they can grow outside the estate. And certainly it's a big deal when you look for what are the estate exemptions right now. Some things are supposed to sunset coming up, right? And there's rollback exemptions taking place.
Right. Yeah. I mean, it doesn't look like there's a lot of, agreement going on. So
yeah, between the two political parties, correct.
So we have a little bit of time before things really start to happen.
Maybe put a number on that for the audience's sake so everybody understands what that means in the call and death benefit provisions taking place.
Well, and just rough numbers. I mean, I don't have the exacts, but basically rough numbers are good enough. Right now, if you're married, each of you gets, about 12 to 13 million that you can pass on. So a household could pass on 24 million. In a couple of years here, if nothing happens, that's going to go back down to its original or passed under the Trump administration, that time period, going back to about half of that. So then you're passing on, about 12 million.
Total. Yeah.
Total.
Yep.
So 6 million each. 6 million if it's just a single person, 12 million if it's a married couple, which is 24 million doesn't impact a lot of people. 12 million starts to impact some people.
I think I'm going to interject here. Good job. I agree with exactly what you're saying, but then I'll also take it one step further. If it doesn't change, if it sets at 12, we've all seen what inflation has done to everything in the last 3 or 4 years. You've seen what's happened in real estate values in the last 3 or 4 years. Well, 24 impacts a segment, yes. 12 million impacts a bigger segment, yes. But what might be $2, $3, $4, $5 million today could be 12 in a hurry. And so some of that just goes into the planning stages.
And they need more money. The deficits are huge.
The government needs more money. Yes, the deficits are enormous. And they're going to find, especially if, it doesn't matter who goes in. Over some period of time, the math will just add up in such a way that taxes are going to have to go up. And they're going to find it from one avenue or another. And the death tax is a piece of that avenue. And so planning for that to take place and getting things out of your state benefits your kids or whoever that legacy, however you want to give that.
Right. You said they have to get the money from somewhere. Are they going to get it from people who can't even afford to give it? Right. So they're going to have to go to the people that have it.
That's right.
Right. And so they're going to look at things like the estate tax, people that higher income earners, and they might even look at, some of that business income. Fortunately, there's a lot of value. I believe a correct belief that the government partnering with people doing housing, providing businesses is a great thing. Right. And so they give some tax benefits. But we'll see what happens as they need more and more money. And there's only a certain amount of people that can actually afford to give that much more money.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Correct. Yeah. I read a stat at one point. It was something like 48% of the country doesn't pay tax at all.
Right.
You're not getting out of that segment.
Right.
Correct. So they've got to go someplace. Yeah, you're exactly right.
Right.
What are you most excited about this year?
In real estate?
Anything. Real estate, life, answer them both, however you want to take it.
Well, most excited about probably my family. Most excited about my family. My kids are at just such a fun stage that it's going to go quick. So I got to appreciate that.
What are the age ranges?
In just like a week or so, it's going to be 15 to 6, but it's 14 to 6 right now.
Okay.
It's like every 2 years. Spread out that way. So
it's fun ages.
Yeah.
Right. All through it. And you're right. time flies. doesn't
Yeah. People keep telling me that, but then I'm like looking back and I'm like, yeah, I'm experiencing it already. I can't believe I have a kid that's going to be, 3 years from leaving the house.
Yeah.
So,
Yeah, it's a different experience. Our eldest is a senior going to college next year. I won't say where. It's not in the state.
okay.
Going to college. And yeah, it's a whole range of emotions, right? You graduate like in 10 days or so, and it's excitement and slight depression, if you will.
Yeah.
And it's just a range of things all at the same time.
Yeah.
All good at the end of the day. That it's fun to see all the years and love, energy, effort poured into somebody and becoming a fine young person.
Yeah.
It's tremendous.
Yeah.
Let's do this. Final 3 questions. You ready?
Yep.
If you had one piece of advice for your 20-year-old self, what would it be?
I think I questioned myself a lot when I was younger. And I wish I could have just said, just be more confident. What you think, your instincts, didn't know everything back then. So wasn't as smart as I learned a lot.
Sure.
But I think I was timid to get into real estate, for example, to do things in business on the other side. And I wish I would have maybe had the courage to do some of those things that I was dreaming of instead of just kind of being safe.
2 books that changed your life.
There's some books by Garrett Gunderson. Have you ever heard of Garrett Gunderson?
I haven't.
He's not really talking about real estate necessarily, but just kind of the different mindset than traditional financial planning. I was a traditional financial planner. For the first 5 years that I did this, I was no different than anybody else. And I read a book called Killing Sacred Cows that he wrote, and that was a New York Times bestseller. That's his most famous book. And I was like, this makes so much sense, but it goes against a lot of what Wall Street says. I have to be careful what I say there. So I'm going to leave it at that. But that book definitely changed a lot of things professionally for me, and even just how I started to take courage and following some of my dreams. I've read a lot of good books. I definitely value, 7 Habits of Highly Successful People. That's such a common book, though, that I would say that another one that he did was What Would Billionaires Do?
Stephen Covey?
Well, Stephen Covey is 7 Habits.
Yes.
I'm talking about Garrett
Gunderson. Okay.
I'm giving him 2 books.
Yep.
I'm really pushing him.
Quite the hat tip.
But he wrote a book called What Would Billionaires Do?, which talks about a lot of the things that I talked about today he kind of compares the 2 well-known families, billionaire families in American history, how one of them faded off. There's nothing there for that family anymore. And the other one is prospering, and just kind of compares the 2. Really inspired what I'm doing with my estate planning.
Yeah. Well, the wealthy certainly do things differently.
Yes. Yeah.
If you were cast away on an island, you could only get 3 pieces of data about your real estate business each and every month. What 3 things must you know?
About my real estate business?
Yep.
Well, I almost feel like that's already true of me. I'm not on an island. As somebody that lets the management, the day-to-day stuff go to somebody else, what I am looking at is I'm looking at rents. I'm looking at unusual expenses. I'm probably getting a different viewpoint, but I still wanted to probably know if I'm starting to see some unusual expenses, why is that? We've had some weird things happen in our real estate this past year, just with some incidents that the insurance claims. How's that going?
Give me an example of one unusual thing that transpired in the last year.
I think the most unusual would be we had one of our tenants ran their car into our apartment complex. The expenses were probably about $45,000 to $50,000 to repair it.
Yep.
His insurance said it was $35,000. Our insurance, if we would have gone with our insurance, they would have said, hit the deductible and you're going to get like $30,000. So, we had to take a pretty big loss, but that's a unique thing, hearing that somebody ran their car into your building.
Yeah, it's happened.
Yeah.
I had it happen.
Yeah.
Somebody ran a car into their Dollar Tree that I own.
Okay.
Yeah.
So those things happen.
They do. You need insurance.
Yep.
Yeah.
That's good to know that it's happened to somebody else. Sometimes I feel like I'm losing my mind, some of these expenses that come up. So.
Yeah. Old lady went to hit the brake, hit the gas, and straight through the front of Dollar Tree.
Yeah. I didn't get the story on ours.
There are uniquenesses, especially you probably end up with far more unique stories when you have 280 some odd apartment doors.
Yeah.
That's a whole bunch of bodies, and then people just create things.
Yeah. And it really depends on kind of the segment that we're dealing with in those. We have all different segments. We have higher rent segments, and we'll have what we call lower rent segments. It just so happens that the lower rent segments usually have some of the incidents. And that's why I'm glad I'm not the property manager of those.
Yes.
Right. But those do pretty well cash flowing. That was my first deal, was the low income one. So, I mean, it's been doing well, but there are some headaches with that. So,
well, that's property management's a job.
It is.
Owning and operating a real estate business. It's a job, although it's different.
Yeah.
It's very different.
Yeah. It's worth every penny to not have to do those things. That's what you have to kind of think about is, especially if you have a day job that you want to keep, and I love my job, I cannot have those things come up, the property management stuff.
Right.
It is so worth it for me to just share some of the wealth, not have to deal with that.
Yeah. And when you underwrite a deal, there's a line item for property management on an apartment complex.
Yeah.
It's in the deal.
Yeah.
Somebody's going to do it. Somebody's going to get paid it. So either you're going to pay a third party
Right.
or you're going to earn those pennies yourself.
Right. It's what drove the owner of the previous, he didn't hire it out. He did it himself. Didn't want to keep the building. I kind of understand if you were not going to, but that's why we hired management.
Yeah. If you're going to manage it, that thing, it can tire you out in a hurry.
Yeah.
Yeah. Matt, it's been a great conversation. We talk all day about all sorts of things.
Yeah.
For people, they want to find you, they want to follow you, they want to connect with you. Where can they go? What should they do?
Okay. Probably the best way would be I have a website, www.mattvanmanen.com. So that's MATTVANMAANEN.com. That is my professional website. You can definitely go there and there's a place to contact me, send me a message. Happy to connect that way.
Great to have you here. The link's below in the show notes for everybody. I appreciate you being here.
All right.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.